Good afternoon. Today is May 23rd, 2010. This is Trading High Probability. We're going to start off looking at the spider, the SPY, the ETF of the S&P 500. And you're going to notice that Friday produced, this candle right here produced what it's called a piercing pattern. This is what happens when the price closes previously and the opening price gaps down and then shoots straight up and closes at least halfway into the previous closing day or above. When this happens, the price has been pierced and the bulls have taken over, and it's a shock to those that were short, and they have to start covering, and a rally should be expected. Let me just zoom in a little bit here. And right here, this white moving average line that we have drawn here is the 200 period moving average. Coincidentally, it's also the just under or just at the low from last Thursday's low, which was from the 19th at around 110.36. The This moving average is at 110.41. So we do expect this gap right here to be closed on Monday, but the problem is if you're trying to play this, the risk reward just isn't there. I mean, if this pulls back and stops you out, because this has virtually no resistance up until about 107 area, which would be down here, and just has to travel just another dollar up to the upside to close that gap. Although we do feel that it should go all the way to the close around 111.74. So that bearing in mind, it's about a 1-to-1 risk reward if you feel that it will go to the previous close to this point here around 111.76, excuse me. Which also is coincidentally, you see this blue line right here, we use that as well. That's a 8-period moving average. A lot of times the price will come back up to this, hit it, and come and roll back down. Just like it did as it was rising here, it kind of hugged this 8-period moving average, this exponential moving average, until it broke through it, came back, retested it, and kept falling. Now this yellow line is our 135 period moving average. This is also a lot of resistance. So that's why we said in a newsletter that it could get to the 111.70 area or as high as this 135, but we don't expect to get much higher than that before rolling back over. Back here is our kicker signal that we talked about back on May 4th. When that developed, we said that's it. The market has already set its top in, and we took it short. We rode this down to this point, and we took profits off. Too bad we didn't grab that the move back up. That just happened so quick. We just didn't expect that. And for those that have held it, just keep holding it, or at least we're holding a portion of our own portfolio, because again, unless this price comes back up to here, we don't see this market coming back. We think this is the end of the bull run in this bear market. Now, as we said, here's your 8-period, here's your 20-period moving average, which is also acts as resistance, and here's your 50. What happened here is this has pierced the 200, has come back up to the 50, and is now finally gone past the 200 again. Let's take a look back in time just to see how it reacts. And if we go back to before this started, this period here is October of 07. It was above the 200 period, came back through, went back up again in November, and finally came back through the 200, and then it always retests, and then sure enough it fell apart, and that lasted all the way through May of 09. And by the way, just to point out, here was that kicker again right there back on November 1st of 07. Let's also take a look at our MACDs. Our MACDs are showing some bit of a divergence, which we did expect, and we, of course, went ahead and took. If you go ahead and let's draw this out here, we see this, and we saw this form here. So when this popped down into this low from last 2 weeks ago, Thursday, this was evidence that, and even coming back to here, let's see, continue our line all the way back to here. This low was from February 5th, so we hit it 3 times. So at this point, we do expect that bounce. We expected that there, as well as if we take a look at our money stream. Back in April 26, we saw our money stream break to the downside, especially on the 27th, was more apparent. And once we broke that money stream in, we called an inside 2 day. This inside 2, this is our own little made up rule right here. Those 2 green bars are our inside 2. We shorted this at this top here. And we said, okay, this is probably starting to roll over. We're going to get a nice kind of rounding top right here, and that's what typically happens with the tops of these bull runs. We're going to start rolling over, and sure enough, we took that short right up top here. It fell apart, and then here we just added right to our positions, and it just kept on rolling over. This really was our confirmation of this inside 2 day for a continuation pattern once this bar developed here. So again, our money stream is showing that it's rolling over, and even though we have this this big piercing bar from Friday, we do expect this to rise up still and into some kind of resistance in this area before it starts to roll back over, or we might get a little bit further up to this area before it rolls over. The money stream has pushed so far down, it's just starting to fall apart, and it's far from rising back above the moving average. For it to do that, it might have to consolidate in here for a while before we can see any upside to it. Quick last peek at the spider. This is a weekly chart now, and on this weekly chart you see the 200 period moving average right above. We might come back up to retest it one more time, but I don't think we're going to get all the way up there. As you can see, this is how we finished out last week. Here's your 50 period moving average. We came down, tested it. Our next one will probably break through, and if we break through this 105 area or so, 104, down we come. Well, that's our review. And oh, by the way, look at your MACDs. They're gaining momentum. It's starting to come down. So there is no divergence from here to here. In fact, really and truly, there is a negative divergence where this should start rolling over any time now.